Intel stock is currently trading at 53.30 USD, showing an intraday gain of 9.76% as of noon on Wednesday, January 21, 2026. This massive upward surge brings the price to its highest level since January 2022, effectively wiping out years of stagnation in a single month of aggressive buying. While most retail investors using the Robinhood app or browsing investing sites are seeing a simple green candle, the reality of this move is far more complex. The standard narrative is that Intel is finally catching up in the artificial intelligence race, but the actual driver is a fundamental shift in the global semiconductor supply chain that has nothing to do with flashy software and everything to do with heavy industrial capacity. The immediate insight that most market participants are missing is that this rally isn't being fueled by speculation on tomorrow's earnings report alone. Instead, we are seeing a massive institutional rotation. Large funds that typically park capital in an individual brokerage are moving away from overvalued software plays and into the physical infrastructure of the digital age. Intel has positioned itself as the only viable domestic alternative to overseas foundries, and the market is finally pricing in the strategic value of that position, rather than just the quarterly profit and loss statement. This creates a tension between the expectation of a slow, painful turnaround and the reality of a company that is being forcibly integrated into the national security apparatus of the United States. Many investors who engage in self-investing or use platforms like SoFi Invest have viewed Intel as a legacy player that lost its way. The common ground among critics is that AMD and NVIDIA stock have already won the decade. However, that view ignores the fact that Intel is essentially being rebuilt from the ground up with billions in capital from both the public and private sectors. With a $5 billion stake from NVIDIA and $2 billion from SoftBank, Intel is no longer just a chip maker, it is becoming a neutral Switzerland for the entire industry. This is a contrarian reality that forces us to rethink what a semiconductor company actually is in 2026. Looking at the recent stock movement, the daily swings have been violent. We saw a 10.8% rise earlier this month, and today's 9.76% jump is backed by massive trading volume, with over 115 million shares changing hands before the market even reaches its closing bell. This institutional activity is a clear sign of accumulation. When you see this level of volume on a move toward a multi-year high, it suggests that the big players, the ones using professional tools like the Interactive Brokers platform or managing billions through Fidelity Wealth Management, are no longer waiting for proof. They are buying the future capacity of the 18A manufacturing process before it even hits high-volume production. The momentum in the semiconductor sector has been broad, but Intel is currently the best performer in the NASDAQ 100 today. This is a significant shift from the last 2 years, where Intel was often the anchor dragging down tech indices. The macroeconomic pressures of rising memory prices and a potential slowdown in the personal computer market are being overshadowed by the voracious demand for data center infrastructure. Even as some analysts on the Robinhood stock trading platform worry about consumer demand, the hyperscalers are essentially pre-ordering every piece of silicon Intel can produce for the next 18 months. If we look at the business model, Intel is currently split between its traditional product groups and its nascent foundry services. The product side is still fighting for market share in the desktop and laptop space, where the new Panther Lake chips are finally showing that Intel can regain performance leadership without the excessive power draw that plagued previous generations. But the real story is the foundry. By opening up its factories to competitors, Intel is creating a revenue stream that is decoupled from its own design successes or failures. This is the pivot point for the company. If they can successfully manufacture chips for others, they become an essential service provider for the entire tech world, much like a utility company, but with the margins of a high-tech manufacturer. In the past, Intel relied on a vertical integration model that worked perfectly when they were the undisputed leaders in transistor density. When they lost that lead to TSMC, the model became a liability. The turnaround strategy under the current leadership has been to dismantle that old way of thinking. They have streamlined the management structure and focused on execution over everything else. The recent capital infusions have given them the breathing room to focus on the 18A and 14A nodes, which are the technical foundations for everything the company hopes to achieve by the end of the decade. For those who use online investing tools or manage their own portfolios through a fidelity trading platform, the question is whether this growth is sustainable. The current price-to-earnings ratio is heavily skewed by the massive capital expenditures required to build these new fabs. It's an investment-heavy business that requires a long-term perspective. This is why many institutional investors are using Schwab Intelligent Portfolios or other automated strategies to build positions over time, rather than trying to time the exact bottom. The reality of the semiconductor cycle is that it is long, and we are currently in an upswing driven by a generational shift in how data is processed. Comment below how many shares of Intel stock you currently hold, or if you are looking to enter a position before the earnings call tomorrow. It's always interesting to see the sentiment of the community when a stock is at such a critical resistance level. The institutional chase we are seeing today is partly due to the fact that the 2026 server CPU supply is reportedly almost sold out. This creates a supply squeeze that gives Intel significant pricing power for the first time in years. They are considering a double-digit price hike on server CPUs, which would directly flow to the bottom line and significantly improve gross margins. While the market expected margins to stay depressed due to the high costs of building new factories, the reality is that the demand is so high that customers are willing to pay a premium just to secure their place in the production line. Comparing Intel to its peers, the valuation gap is still noticeable. While NVIDIA stock is trading at multiples that assume perfection for the next decade, Intel is still priced like a company that might fail. Today's price action suggests that the market is finally realizing that the risk of failure has been drastically reduced by government support and private partnerships. The CHIPS Act funding and the strategic agreement with the administration have created a floor for the stock that wasn't there 1 year ago. This is a geopolitical shield that protects Intel from the usual market forces that might have crushed a smaller or less important company. As we look toward the future outlook, there are several catalysts to watch. The most important is the ramp-up of the 18A process. If the yields continue to improve at the current pace, Intel will be able to prove to the world that it has regained its manufacturing edge. This would likely lead to more firm commitments from external customers, which is the missing piece of the puzzle for the foundry business. Additionally, the partnership with NVIDIA for the joint development of data center chips could open up a massive new revenue stream that the market has not yet fully accounted for. There are, of course, risks. If the global economy slows down more than expected, or if there are delays in the high-volume manufacturing of the newest nodes, the stock could easily give back some of these gains. The options market is pricing in a move of nearly 10% post-earnings, which means we should expect volatility regardless of the results. For investors using a Fidelity mobile app or checking their Robinhood app daily, it's important to keep the long-term thesis in mind. The day-to-day noise can be distracting, but the structural changes at Intel are a multi-year process. In terms of investment help and portfolio management, many are turning to sophisticated platforms like Interactive Brokers Trading to manage their risk through hedging. Self-investing requires a level of discipline that is often tested during these massive rallies. It is tempting to chase the price, but the smart money is usually looking for the points of maximum tension where the market's expectation is most disconnected from the operational reality. Right now, the expectation is high, but the reality of the supply-demand imbalance in the chip market might actually be even higher. The retail trading landscape has changed significantly with the rise of SoFi active investing and various investing sites that provide real-time data. This has led to faster price discovery, but also more frequent overreactions. Intel's rise today is a testament to the power of a narrative shift. When a company goes from being a dinosaur to a strategic national asset, the valuation model has to be completely rewritten. This is what we are witnessing. The stock is breaking through psychological resistance levels because the fundamental story has changed. For those who prefer a more hands-off approach, products like Fidelity mutual funds or Fidelity ETFs often include Intel as a core holding in their tech-focused offerings. This provides exposure to the turnaround without the individual stock risk. However, for those looking for the highest potential returns, an individual brokerage account is the preferred way to play a specific recovery story like this one. Whether you are using the SoFi trading platform or a more traditional Fidelity brokerage account, the key is to understand the underlying drivers of the business rather than just the ticker symbol. To summarize the central insights, Intel's current rally is a product of its successful positioning as a domestic manufacturing powerhouse.